Alistair, over the next 3 days, let's talk about gold, silver, and their moving averages, as stated in your Substack report on the 5th of July, 2025. Today, we start with gold, and I quote from your report, "Gold is on an unstoppable tear." That's a great little quote, I think. So, your comments.
Yes, I think what you have to do is forget about gold a little bit and just look at what's happening to currencies, particularly the dollar. And the dollar, of course, even though it is currently weak against other currencies, really sets the tone for every fiat currency there is. The dollar is losing purchasing power at an accelerating rate. And this is reflected in a higher value for gold measured in dollars. If we look ahead into the second half of this year, it is clear to me that the rate at which the dollar is going to be losing purchasing power is going to accelerate. And I think there is a further problem, and that is interest rates. Bond yields are not only extremely firm at the longer end and tending to rise, but I think they are going to rise quite steeply. Under these circumstances, the Fed has a huge problem. It has effectively promised that it will cut interest rates later this year. How can it do that when the US Treasury cannot fund itself out along the long end of the yield curve because investors, and particularly foreigners, don't want to buy duration? Why do they not want to buy duration? Because the dollar is going into a debt trap. And as the dollar goes into a debt trap, it's not so much a question of forecast inflation or whatever. It is all about the loss of confidence, not only in dollar bonds, but in the currency itself. And that is why I expect dollar to be on a tear, as I put it, for the second half of this year.
Very interesting comments. You wouldn't know at the moment, but the Reserve Bank of Australia was brought down their latest currency interest rate move, and everyone expected a 0.25% reduction in Australia. In fact, they sat on their hands, and they just didn't know what to say. These are the financial institutions. They what went wrong. You know, the Reserve Bank of Australia is just sitting on their hands and not doing a thing. So, going to be very interesting in the next week or two, in my opinion.
Yeah, Brian, that doesn't surprise me at all, because whatever the central banks say, don't listen to that. It's what they think. They are actually extremely concerned about the situation. And to have President Trump jumping up and down and saying that Powell should be sacked and he should be reducing interest rates and the dollar's too high and all the rest of it is a nightmare for not only the Fed, but also for the US Treasury. And of course, all central bankers around the world are watching this situation and are very concerned about it, even though they don't express it in their public statements. So it doesn't surprise me that in these uncertain terms, the Reserve Bank of Australia has decided to just sit on its hands.
Yes. It'll be very interesting to see what appears comes from this. Thanks, Alistair.